Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 4th of July, 2021, and a very happy Independence Day to all US citizens. Now, we are repeating in today's video the normal weekly update that we produced yesterday. We're doing this simply because we've noticed that the number of views yesterday are considerably lower than normal. Therefore, if you've listened to yesterday's video, then please completely ignore this one, as we are just repeating what was said then. If, however, you haven't listened to yesterday's and you listen to today's, then there's no need to listen to the one we produced yesterday. Interesting, the gold and silver closed relatively close to their week's high, and we reiterate what we believe is likely to happen in the forthcoming week or two. So please enjoy. By all means, give us a thumbs up if you think it's worthy of it. Subscribe and press the bell sign. Gold rose $6 last week from $1,782 to $1,788. Having hit a high of $1,795, so not quite reaching that all-important $1,800 level, and a low of $1,751. A rise of 0.3%, but clearly showing us that the 1750 is acting as strong support. In sterling terms, gold finished the week at £1,292, that's up £9, and in euros it closed at €1,506, that's up €14. So a moderate rise for gold for the course of the week. Silver rose 35 cents from $26.14 to $26.49, having hit a high of $26.58 and a low of $25.58. A rise of 1.3%, but managing to stay above that all-important $26 level, which is positive going forward. In sterling terms, silver closed at £19.15. That's up 33 pence on the week. And in euros, it closed at 22.32 euros. That's up 0.42 euros. The gold to silver ratio fell from 68.2 to 1 to 67.5 to 1. And what we're noticing about the gold to silver ratio in recent weeks is that it seems very, very comfortable within this 65 to 70 bracket. So much so for those advocating 15 gold to silver ratios or 20 gold to silver ratios. But equally, and good news, it's not as it was just a short while ago, well over 100 to 1. Bitcoin is up $907 from our report of last week, and stands at $33,446. It has been as high as $36,545 and as low as $30,191. Now, on the issue of Bitcoin, just a quick shout out to a new channel we've set up, or in fact a channel replacing the Richard and Greg channel called Crypto Plus, where we shall be speaking about cryptocurrencies, but not just those. We'll be talking about definance and alternative investments. New videos will start appearing on this channel within the next couple of days, and so please, if you haven't done so, do subscribe to it, and we've placed a link in the description box below and at the top of the comments section of this video. Now, whether or not you love or hate cryptos or the concept of blockchain, this should not let your personal views affect your knowledge of them, as now almost every investment manager agrees with us, and something we've been saying for 2 years or more, rightly or wrongly, the crypto space has taken funds away from what would, at least in part, have been allocated towards precious metals. And we need to identify the extent of this issue at the very least. Also, the concept of blockchain technology is being followed by central banks and various departments within a number of commercial banks. So it is likely to be with us for some time, whether Bitcoin itself survives or not. Anyway, let's get back to the markets. Dow Jones closed on Friday at 34,786, up 152 points on the day and up 353 points on the week. The S&P 500 closed at 4,352, that's up 32 points on the day and up 72 points on the week. And the Nasdaq Composite closed at 14,639, up 116 points on the day and up 279 points on the week. So a very positive week again for equities. Part of the reason, of course, is this ever-creating of dollars by the Fed, the proposed infrastructure spend by the Biden administration, and more money being pumped into the economy. Brent crude closed at $76.17, down just 1 cent, and WTI crude closed at $75.16, up $1.11 on the week. The dollar index stands at 92.22, now that's up 0.37 on the week, and exactly reversing last week's fall. It had been higher this week, however, particularly Friday, and then it fell back a little. We shall comment on that in a second. Now, we concluded last week's video with the following forecast. Quote, "So the technicals are suggesting gold and silver price consolidation and potentially lower prices, though we all know that much now depends on the US dollar and the potential forecast for QE tapering. As mentioned, the end of the week is likely to be more decisive than the beginning. Our gold trading range for this coming week, we foresee regular trading for gold at 1700 to 1825, with 1650 to 1850 as outliers, and silver trading between 25 and 2650, with 24 to 2750 as outliers. Well, as we can see, gold traded $44 between its high and low, 1795 to 1751, ending the week closer to the upper range, having spent most of the week in decline and moving nicely within our predicted trading range. Silver traded exactly $1 between its high and low of 26.58 and 25.58, and again within our trading range margin. A strong close towards the end of the week, and we shall cover some of the reasons why that happened, particularly for silver. Now, looking firstly at gold, we can see that $1,750 has provided a relatively convincing support level. But concerningly at the moment, for those who wish to see gold prices higher, it does seem to be a figure around which gold appears to be attracted. To have any conviction short term that gold is going to begin, seriously at least, to rise again, it really does need to break out above $1,800. And convincingly so, as we see this figure as strong resistance, at least so far. So much for the vaunted Alasdair MacLeod's theory that Basel III would see major breakouts of gold prices prior to its implementation on the 28th of June. Hasn't happened so far, doesn't mean it won't happen moving forward, and we shall now see over the next week or month as to how Basel III and its changes will actually affect the gold price, if it does at all. And we have produced a video on this subject, albeit quite a few months ago. Now, from a technical point of view, we have the 10-day moving average support at $1,776 and $1,762 underneath. However, should gold fall below 1750, apart from the psychological level of 1700, we have a potential double bottom at 1675, which should, in fairness, act again as extremely strong support. Should that break, then the bears will certainly attempt to target 1500. But there's some way to go before that happens, if it ever does, and a number of support levels exist between those two figures. On the upside, though, we have the 1800 psychological resistance figure, plus the 200-day EMA at 1808, which is just marginally above it. Above here, we have a few resistance points, but the key ones being psychological, obviously, at 1850, and technical at 1860. and extremely strong resistance at the 50-day moving average of 1883, which is why we don't see 1900 gold suddenly appearing. On the positive front for gold prices, and what helped it and silver to rise particularly on Friday, was the fall of the 2-year Treasury rate and a slight slip of the US dollar in tandem. Much of this was the result of the important non-farm payroll report, which, the headline report, provided good jobs data figures and showed that wage gains were holding steady. So what happened? Well, it's worth looking at this as it affected both gold and silver prices. You see, the Friday non-farm payrolls increased 850,000 for the month, compared with expectations of 706,000. The May figure was revised to 583. The unemployment rate rose to 5.9% though, against the 5.6% expectation. We'll mention this in a second. The jobless rate increase came even though the labour force participation rate was unchanged at 61.6%. Average hourly earnings increased 0.33% for the month and 3.6% year over year, matching estimates. The average work week declined though by 0.1 hours to 34.7 hours. Now we were expecting a fall in the price of gold, particularly should the job figures prove strong, because that would bring on the advent of early tapering. And we forecasted that during the course of the week. However, the market had already fallen earlier in the week, and we did mention this, and we still suspect that there could still be some weakness to come, if not in the next few days, then certainly in the next few weeks. However, we cannot ignore the fact that this could be offset by the rise in the unemployment rate, which therefore suggests that the Fed, which has committed itself to regaining pre-pandemic employment rates, are unlikely to do anything to the tapering of its bond buying program or raising rates sooner rather than later. And therefore, we saw the fall in yields and the fall in the US dollar in the latter stages of Friday. Looking at silver now, it moved rather choppily last week, at some stages below and others above its Monday morning opening. Silver, which has been subdued for a while by rising rates and dollar value, was given a slight release on Friday with the fall of the 2-year yield and lower dollar value, in essence because of the rise in the unemployment rate already mentioned. We said all week that Friday would be the crucial day for prices, and so it occurred. Now technically we have support at $26, which previously provided resistance, and is where the 10-day moving average lies. Resistance is now seen at the 50-day moving average of 27.06, with obviously 27 being psychologically important. The technicals do suggest, albeit marginally, higher prices ahead. On the upside, silver has to test 1650, then 1670, then 27, then 27.06. Between its current level and $26, we have 26.30 as support, and just below that 26, and then below that 25.80, 25.50, and 25.30, which provides us actually with a reasonable trading range forecast for silver this coming week. Let's now just take a quick look at economic data moving forward. So if we briefly look then at the economic data for last week, we can see that on Tuesday we had the Consumer Confidence Index up from 120 in May to 127 in June. Then on Wednesday we had the ADP employment report, which showed employment, additional jobs of 692,000. Whilst that was down from May, it was higher than expectations of around 550, and some were quoting 600,000, so that was a positive report. And pending home sales considerably higher than the previous month. The initial jobless claims figures, which came in on Thursday, 364,000, down from the previous week, which is positive, though a little concerning is the continuing jobless claims were slightly higher. We had moderate market manufacturing PMI at 62.1 and ISM manufacturing at 60.6, though this was not deemed to be particularly negative. But most important of all were the non-farm payrolls on Friday. Now, we suggested all week, in view of what was happening with the ADP and the weekly jobless figures, they were going to be good, and they were. But the surprise figure, which hit the markets on Friday, was this one, the unemployment rate. It had risen from 5.8% to 5.9% against expectations of 5.6%. And this is why we saw the US dollar value go down, yields fall, and gold and silver prices pick up towards the end of that week, the end of Friday. Because what this suggests, bearing in mind, as we've already mentioned, the Fed has stated as one of its aims is to achieve full employment or pre-pandemic employment. And if the unemployment rate is going up, it's going to be much more difficult for them to justify an early tapering of their bond buying program or rising of interest rates. So let's have a look at what's happening next week on Monday. Of course, we have the Independence Day holiday, and a happy Independence Day to everyone in the United States. On Tuesday, important day, market services, final PMI, and the ISM services index for June. Wednesday, job openings, okay, but the FOMC minutes, a lot of investors and analysts and commentators will be looking at those to see the underlying thinking of the FOMC's decision 2 weeks ago. Thursday, of course, the initial jobless claims, and this may have a little more interest now, again, simply because of the unemployment rate going up. Quite important, though, consumer credit. And then on Friday, a light day, but don't ignore it, wholesale inventories. So that's what we've got coming ahead of us. And some of these could have an impact on what's going to happen to gold and silver prices. And I did miss out. I focused on the non-farm payrolls last Friday. Let's not forget the trade deficit also fell, minus 71.2 billion. But what was hugely positive were factory orders up 1.7% compared with minus 0.1% the previous month. We'd like to see how that now moves into June. We won't know for almost another month, of course, but we think if that is maintained, then to a large degree, it shows a very positive sign for the US economy. This video is now becoming quite long, so we won't delve into political news here as we normally do, but we may cover what is happening both in the commercial world tomorrow and pin some political activity on the back of that. So please don't miss tomorrow's video. So where do we see gold and silver prices moving this next week? Bearing in mind that we are to a large extent reliant on the movement of interest rates and the US dollar value. Well, the economic data in terms of quantity next week is light, but in terms of importance is quite solid. We have the services PMIs, consumer credit and wholesale inventories, plus an insight into the FOMC minutes on Wednesday. Gold and silver, frankly, would have been down this past week had it not been for the rise in the unemployment rate. And now so much depends upon how strong next week's economic data proves to be, as investors are starting to have some doubts. So our gold trading range for this coming week, we foresee regular trading at 1725 to 1850, with 1675 to 1875 as outliers, and silver trading broadly between 25.25 and 26.75, with 24.75 and $28 as outliers. What are your thoughts? Do you agree? Disagree? Please do share them. Also, do not forget to subscribe to Crypto Plus, where, as already mentioned, we will be covering other forms of investment, finance, blockchain and cryptocurrencies. Meanwhile, thank you so much for listening. If you haven't already done so, do subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. Finally, have a safe, enjoyable weekend, a happy July 4th or 5th bank holiday now, and a prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.